Good morning and welcome to Master Trader, where you can learn to use simple market and stock analysis to make money investing and trading. I'm Greg Capper. Today we're going to take a look at the markets, and I wish you all a great end of year, a terrific new year. I hope everybody had a great holiday, and as we move forward through the markets here at Master Trader, we will continue to help you navigate them and find profitable opportunities. So let's take a look at what's happening here. So far, it's been quiet as expected. It usually is into year end. And we're likely to see the markets move up as they typically do in a bullish trend, especially into the end of the year. Some call that window dressing as funds will move into what was strong. And technology has gotten beat up a bit as of late, so some of those names might pop up into the end of the year. But as looking at the broader market indices here, you could see how they've kind of inched back toward these areas of support, and the Qs here, the NASDAQ 100 has pulled back a little bit further. As Apple is getting beat up, there's talk of lawsuits now, and the chart of the stock doesn't really look too bad. It's chopping around, and odds are it'll probably set up as another buy soon. But right now it's a bit whippy. We'll take a look at that. And the Russell is just chopping sideways and inching lower here. And these type of patterns typically result in a move up, where you've got this kind of slow grind to the downside towards support, and then prices push back up again. So, right now things are kind of flattish, as mentioned, and but the Qs here are into this area of support. And yesterday's little bottoming tail bar, wasn't much volume. Again, there's going to be slow trading here into the end of the year, or light volume, which is typical. So we'll see if things can get going here. And, the spiders chopping sideways, and the transports actually holding up quite well after this move up, showed some relative strength, but an inside day yesterday, didn't go anywhere, and we'll see what they do today. But we shouldn't expect too much, but be ready for whatever is as day traders, as we always are. All right, so one of the things I want to mention for you guys to all think about going into 2018, especially those that are new to Master Trader and my teachings from the past. You'll see that there are no lines being drawn diagonally on my charts here. And the reason for that being is those type of lines are subjective and useless. When you see individuals drawing lines like this, and sometimes they just draw lines to fit whatever their expectations are, or positions that are going against them, or for whatever reason. Believe me, you connecting this dot to that dot and projecting it into the future does not create some reference point of support or resistance into the future magically. Okay, look to the left, see what price congestion is there, or the lack thereof. It's that simple. But drawing lines like this and so on, and just what I call a maze of confusion, these individuals really have no idea how to read a chart, and they just following the old techniques from the past. Anybody that's ever drawn a trend line and seen how prices just blow right through them, don't stop at them, have determined by the use of a trend line that the trend is broken, only to see it continue in the direction that it was going, even though they're confused, baffled by how this happens, they continue to do it. And repeating the same thing over and over again is the definition of crazy, when you expect a different result and you're doing the same thing. So get rid of the trend lines on the charts, look to the left, do your analysis horizontally, and you'll be a lot more clarity to what you are doing. All right, so let's look at a few charts here as to what's going on. Here's Macys. Retailers got clobbered this year. This came off of the low. It's consolidated here. It broke out yesterday. So what you want to do is look to the left and see, does it have room? There's an unfilled gap over here and this little congestion, so that would be an initial upside target. Now, breakout days typically are followed by inside days, and then you get a continuation pattern. We'll see if that sets up. Since these retailers are in play, sure, it's possible this could pop right back up again here, but we don't chase these type of situations. I mean, if you can read multiple time frames and enter from an intraday time frame on a daily pattern like this, that's all well and good, but it takes a little bit more education and know-how to how to combine those multiple time frames together to do that. Let's take a look at Apple. That is one of the main stocks in the news here. And that was setting up and looking like it was going to try and push up into the end of the year. And these lawsuits and this news of they were slowing down the old phones, lawsuits being initiated, the stock gap down here. So now the question is, let's draw our horizontal line. Where's support? Well, here there are the prior bottoming tail bars right here. So here's your support. No need for drawing diagonal lines and trying to mess with that. Anyway, so there's some support here in this area. We've got the 50 MA that's widely followed by the institutions, and this is where it should find some buyers, and we'll now wait to see if that actually is the case and how that sets up. It's that simple. Where were sellers from the past? Where were buyers from the past? Combine this with multiple time frames, and now you're starting to see what professionals look at and how they determine entry points. So they look for stocks that have multiple time frame alignment, institutional followings, meaning those institutions want to buy this stock regardless of what the news is, and then you look for the appropriate point and then price patterns that confirm your bias. So when we talk about Apple, that's exactly what we'll be looking for into the new year for this type of stabilization here, and we'll see if they come for it again. Now, we always have two scenarios, meaning, well, what if Apple just breaks down through here? We go to the next reference points. It's that simple. And then as we combine multiple time frames, I'll show you, we look at what the trend is, right? We go to the weekly chart, clearly in an uptrend, nothing wrong. Now, ideally, it holds this consolidation, this little downside break here, and prices chop around, and then you get a move higher. What do you do right now? Nothing. You wait, you stand aside, and you wait for the uncertainty that's been created in the moment to clear up before you act. That's what intelligent professional traders do. So with that being said, have a great trading day. We'll see if we have another update or two into the end of the week before the new year. And visit us at Master Trader. Of course, subscribe to the channel, get more updates, more ongoing education, and we will talk soon. Happy trading.